Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Read through the comment section. I'm going to answer some of your guys' questions, and I'm going to be giving my opinion, financial opinion on all this. So I talked a little bit about the overall market update in the home builders. Some of the home builders are pulling back, doing their retest moves. And one thing that I think I want to touch on is time frame. And it seems like almost everyone has the wrong time frame. I mean, not Finding Value, but everyone else. No, I'm just kidding. The time frames are messed up. So what everyone does is they look at the short term. They look at the past 6 months or year, and they say, "Well, this is going down. It's wrong." Guys, the markets are bigger than that. You gotta think big. You can't think small, short time frames. It doesn't work like that. The markets aren't on that time frame. You have to get grandiose. You got to get big. You got to get 30,000 foot views looking downward from a top of a mountain. You know, we're not in the trenches digging the trench, and all you see is the trench that's right in front of you. What I'm saying is take the high point and look at the entire thing. Look at the big picture view, and that's what we're doing. We're playing the trends, the big picture trends. So in order to validate that you've got the big picture trends going, you need to back out. You can't be in there in the trench digging this thing out going, man, I can't see anything but this trench. I can't see anything but that's what in front of my face. If the price goes down that day, the market doesn't like it. If the price goes up, everyone loves it. If you're flipping that fast in your viewpoint and your opinions on certain sectors, you're too close to it. You got to back way up. So I'm going to read some of these things. It says the 10-year yield is forming a rising wedge, which is potentially bearish. It suggests that money may move back into bonds. You're looking at it too close. You got to back out. You got to back out. Does this look bearish to you on a 40-year trend break to the upside? What always happens? Oh, sorry. You're looking at me while looking at the chart here. Does this look bearish to you? I mean, we have a 40-year declining trend line here. We've broken that to the upside. I drew the trend line on top of all of these closing of the days. We had a little bit of an overthrow. We came back, and now we're rocketing higher. Almost as if this detour wasn't supposed to happen, with the rates basically almost like they were held underwater for a little while. I think QE did something there, quantitative easing, buying some bonds up. Yeah, that's what happens. You ease up on the bond buying, and everyone's selling their bonds en masse. You're getting a large increase in the interest rates. Why? Because the market wants interest rates higher. It doesn't want them down here. And why is that? Because we're producing too many homes. Why are we producing too many homes? Because there's a shortage of homes in the market. That's why rent prices are too high. Not too high. That's why rent prices are high, and that's why home prices are rocketing higher, and we have no inventory of homes. You got to piece this all together, guys. It's a big puzzle that you got to piece together. And this breaking a 40-year downtrend means something that's monumental. It means it's a paradigm shift. Now, could this do a retest move? Now you're thinking about technical analysis. It could. This could do a little bit of a return move. It might not. So rather than trying to figure out if we're going to get this teeny little move out of this thing, look at the big picture view. The big picture view, it's broken. The downtrend is broken on a 40-plus year downtrend move from the peak of 1981. A little bit over 40 years, and we're breaking out of it, that downtrend. Now, this is going to have profound effects on the markets if this interest rate moves on up with higher lows and higher highs. I'm not saying that we're just going to move straight higher. What we're saying is that we are going to gyrate up and down with higher highs and higher lows. That's how the markets work, in a stair-stepping pattern, perhaps. Something on the lines like this, where you stair-step higher. Something on the lines of that. Doesn't mean it will be perfect, but it will be something similar to that. Now, I know a lot of people, interest rates, we can't afford interest rates. Well, that's not my problem if we have a hyperinflation, guys. I don't know. The market wants this. That's all I can say. I can't tell you what the ramifications all of this necessarily are. But the market wants higher rates. We have too much inflation in the system, and they're going to have to buy it. If they want to hold rates lower, they're going to have to print copious amounts of money to hold it down. That's what I think. They are in a predicament. They're going to have to start handling outcomes with what's coming, in my opinion. There is no solution to higher interest rates. I was reading through here, looking no good, guys. Stocks benefits from housing market. Zillow, Lennar, Open Door. I don't know what this is. I think the top is in. This is 2005, 2006. No, it's not, guys. The data that you're looking at is not the correct data if that's what you think. We could build 2 million homes straight for 10 years and barely satisfy the demand. We haven't even built 2 million homes for 1 quarter yet. Or I mean, for here. We can go to Fred housing starts. And we are massively underbuilt, guys. This is and the deficits are growing. They're not actually shrinking. They're growing. So when you look at this, if your average is about 1.4 million or so, we just got up into 1.769 million. We can stay up at 2 million for 10 years straight and still barely satisfy this demand. We have a millennial generation that's larger than the baby boomers and the Gen X and all these other Gen Z, Gen X, and Gen Y, which we don't have the homes. Now, if you just do a quick search, housing shortage in the United States, America is short more than 5 million homes, study says. The US is short 5.24 million homes. Now, what that means is that we are short 5.24 above the average demand. Above the average demand. It says, will the middle class survive a nationwide housing shortage? This shortage is significant. It's acute for small entry homes. Housing in 2021, 5 more million homes needed for supply to catch up. The housing shortage is worse than ever. Do you think that sounds like a housing top and I just typed in housing shortage USA? If every article is saying, look, we got some problems here and they're big. So, guys, we haven't even gone into, by looking at the Fred housing starts, into a big expansionary phase of real estate yet. We haven't even done that. So what makes you think we're at the end of this before it even began? We're right at the beginning. Now, what we're going to see, if I were to yank up things, we've got a 40-year break in interest rates of this declining trend line moving to the upside. This is going to be epic, guys. That's my opinion. It's going to be epic. You got to back out. And yeah, we're going to go up and down. People are going to be calling false tops like 1,000 times a second because I don't know what the heck they look at. Data that just doesn't mean anything, apparently. And they think that affordability is the only metric that you need to use to see what a housing market. You got to look at inventories. Inventories tell you absolutely everything you need to know. If you look at inventory and you look at the absolute level of inventory, then you look at how fast that inventory is moving, and then you look at the price, you can basically glean all the information that you need. Now, if you look at the commodity sector, this thing is rocketing higher like it's ready to go. I don't even see, this is like the first wave of this move even. I haven't even seen a big pullback in it. And we're going to get a pullback in it at some point. I'm not saying that we're going to go straight higher, but this is obviously one continuous move. It hasn't even put a first wave in yet. And the size of this first wave is going to determine how big the commodity bull market will be when you do your analysis for Fibonacci moves and all, extensions and all that stuff. So like if you look at the big picture view, we are short a whole bunch of homes. It's estimated between 5 and 7 million homes that we're short in the market. And when they say that, if your average is 1.4, what that means is that when we build above 1.4, that's us trying to catch back up. But we could build above 1.4 million, and you're only making up 100 or 200 or 300,000 of that difference. So if 1.4 is the average that you have, last month we only made up a couple 100,000, 260,000. 360,000, something like that, depending if it's 1.5 or 1.4 million of the average demand over time, depending on what number you use. 300,000, 400,000 at best. And we could do that for a very long time. Because remember, we have a larger demographic coming. So it's not just the shortage, it's the shortage plus the demographic that's coming on top of it. We had a long ways to go in the housing market, guys. And then once we get that built, once we build the 5 million homes on top of the 1.4 million that we still have to build of the average demand, we have to build back the inventory. And the inventory may take a couple million homes to build it back up. If we're at 2 months and we need to get to 6 months, that's 4 months. I can't remember what 1 month of inventory is. It's a few 100,000 homes, 400,000, 500,000. If it's 500,000 homes for each month, and we have to build back up 4 months on top of it, that's another 2 million homes. Guys, this is so far from being a top that it's ridiculous, in my opinion. It's going to take years and years for this to catch back up. It could take 5 to 10 years, or maybe 4 years. It depends how fast we can build the homes, but it could take a very long time if supply chains aren't catching up. If they're slow and they can't get these materials to finish homes, I don't know how you're going to catch up. You're just going to see rent prices continue to go higher, and you're going to see home prices continue to go higher. And then if you have shortages and cost inputs that are increasing with inflation, which is from the housing market and from money printing, it's a combination of those two things. You're going to see new home builds continue to go up in price. So you're going to see this area where homes become a lot less affordable. Period. They will become less affordable. That's the market trying to find a balance in the market. So we've got that now. When I look at these other things like the CRB index launching like this, we're probably now. I've seen some people do some pretty cool things with this, and there was one, and I wish I had more data on here. Maybe there is. Let me see if there's a commodities index that goes back even more. We've got, well, maybe you know what? Maybe I could do the producer price index, because that, in a sense, is almost like your a commodity price index. So if I were to take, I think it's this guy here. Okay, so we got this guy here. This thing's been rocketing higher. We'll do the auto. Now there was somebody, I think what they did is they tied this together. We'll do the trend line. Oops, accidentally hit that. Maybe there's like a trend that maybe we can hit that, or we can take it down here. I'm just playing with stuff, and you kind of hit a couple of these trend lines here. I'm just touching the tops here, and we've got a good ways to go before we hit this top here. We might pause here on the big first move, do a little bit of a pullback, and then run again and break out of this entire thing, where we break to the upside of this entire move, signaling a massive breakout of commodities. I don't necessarily know, but I can tell you this: we're in a strong uptrend, and I think we're still in that first type of wave. Now, if you look at kind of like any of these other patterns on all these other companies, like a fertilizer company, Mosaic, I mean, we could run all the way up to $500 on this by taking the tops of this and running it to a larger move. Now, we could break out of this and move higher as well. Again, I'm not going to sit here and tell you guys how high things are going to go and make all these projections, but we've got the patterns to really start to move in large ways. Now, we can look at the oil price. And well, here's gold. We've got gold here. And, there's a thing where, I mean, you could even tie in, a move that comes like up here easily. That puts us more at like a $2,700 clip. And maybe we break that to the upside. I mean, we'll find out, guys. This is these patterns that are breaking, like Newmont. And remember, it's like, what does gold have to do with housing? Everything has to do with everything. They all tie together. That's the whole point of everything. I mean, that's kind of using the good old noggin. Let me move this guy. Whoops. Move it back down here if I can. Oh, I'll have to move that later. I don't even know how it got up there. There we go. We're breaking this big pattern all the way from 87 upward. And we may do a pullback, that's fine, but it's going to be a big old move. The size of this pattern and the way that this thing is moving, it's going to take some time, which makes me think that the markets think that whatever's coming is going to be big, and it's going to take a little bit of time. So all these things are interconnected, guys. They're all interconnected. Think of it as a bunch of nodes out there that are all interconnected, and that they're all telling us a story. The people who are buying Newmont are telling us a story. They're saying, hey, look, we're going to have a massive move in gold coming up here. And we can see it in these long traded things. Now, Hecla Mining, Hecla Mining's a company. Now look at this. This is what's crazy. This is a trend line from 1968 that's about to break to the upside. We break this trend line, that's basically saying that a paradigm shift is coming. And it could be massive. And we're right there about to break out. So Hecla Mining also is telling us something. It's a piece of information. It's a piece of, maybe it's a 10,000 piece puzzle that we're trying to put together. And Newmont already broke out. Hecla will probably break out. And maybe it's going to be a 10-year, 20-year, 30-year, 40-year bull market in commodities. And when we look at the market balances on all of these different materials, zinc, aluminum, copper, on and on and on and on, their market balances all go into massive deficits out 5 years, not even 5, 2, 3 years from now. They all go into these massive deficits, all of them. That doesn't resolve itself quickly. These mines can't be put up. And I don't know if we have the mines out there with the quality of assets to really mine out. I mean, we're going to go into a very large negative energy deficit if we try to mine all this stuff at low ore grades. I mean, it's going to take a lot of energy. Energy is going to be one of the best investments coming up here for probably the next decade or two. And I think it's going to be in anything, any energy investment. I think we're going to be burning fossil fuels. I think we're going to be doing renewables. I think we're going to be burning absolutely everything we can to get this stuff out of the ground for becoming wealthier as a world. Everyone in the world wants to become wealthier. That's basically what it comes down to. And these patterns are all massive, guys. They're all setting up. So there's no reason that they would set up these structures to not break them and just like fizzle out. I just don't see that ever. I mean, it could be the first, but I don't think so. And we've barely gotten into this housing market, guys. This is the driver of that inflation. I think it's going to take a while. So I respectfully and humbly disagree with you both. I think you're missing the big picture. I don't think so. Yes, there's a lot of dollars sitting out there, but there's absolutely nothing to back it. The moment interest rates get too high, too quick, boom. All those loans, all the credit dollars gone within a few weeks. Let's also look at sentiment. You don't hear anybody saying rates can still go lower than 2020, but I think they can and they will. The only way to control inflation is by destroying it. Central banks right now are cocky and forgetting every historical instance in history. If you fight inflation, you fight your own future. Fed will tighten too fast. Fed will cause deflationary fall, the looks of what we have never seen before for maybe a few months. And that's when they are, as well as politicians, will realize that the only way out of the problem creates by this credit, fiat, debt, whatever. Deflation is created by a destruction in loans. The loans, 60% of commercial bank loans are against real estate, residential real estate. And the inflationary moves are against homes, new homes, new loans against new homes, which expands the M2 money supply and whatever printing they do in the background on top of it. That is where the inflation comes from. Deflation does not come from increasing interest rates. Deflation comes from less loan volume growth or a decline in loan volume growth or a destruction of credit that's been in the system. So I disagree because we don't have the homes to destroy the housing market with. They don't exist. And if there's people who can't afford their houses for whatever reason it is, those houses will be foreclosed on, which are foreclosures that are at very low levels. And then people will buy the foreclosures because we have a large line of people looking for homes. So I think that when people think of deflation, they don't know where deflation comes from. It doesn't come from increasing interest rates. Now, increasing interest rates may cause people some problems. But here's the problem. If you have a massive shortage in homes and the majority of the loans going into the system against new homes is inflationary, how do you stop the housing market with not putting new homes into the mix? That is the question you have to answer if you're in the deflation camp. Money just doesn't go poof. Money rotates, it moves. And we've been in an increasing interest rate environment. Before these deflationary crashes, you have housing starts decline, which we don't have. And you would also see the Fed funds rate basically go sideways for a while. These things don't happen in measured in months. They happen and are measured in years. We have to first slow the momentum, and the momentum is going up. So I think that most people who are calling for anything but inflation are probably wrong. Now, if they're calling for a decline of the inflation rate, I think we'll see that first. I don't think we're just going to massively decline. That's my take. Could I be wrong? Sure, I could be wrong. Sure, we could get I just don't think we'll go back into a negative, a deflation. I think it will slow. The inflation will slow first. It will then decline, and then it will go negative at some point, possibly. That might be 10 years from now. Might be 2 years from now. Maybe we have a hiccup. I just don't think it's measured in months. I think it's measured in years from where we are today, at least. We just don't have enough homes in the system, period. Now, I haven't heard a single good argument anywhere on the internet that I can find where the housing market's in a bubble. I have to see the inventory first go up. I can easily change my view, but I have to see it go up first. And you know what? The timing that it will give me will be plenty of timing before the market is about to crash. And that's the housing starts that I'm referring to. So when I look at the housing starts, and I'll pull it up here in 2 seconds. It should be right here. This is your housing starts. I haven't seen this go from a high level and just go straight down. I haven't seen it go here and then just drop below the average like that to get a deflationary crash. I've just never seen it in history. Usually what you see is you see a movement up, it goes sideways for a little bit, and then it goes and reverses back. Every single top, we've seen this type. Now, this one's been a pretty sharp top here, but we still had Jan 06. It was still 18 months before we went from peak to below the average. And then down here is when you start having problems in 2008. That's when you got to get out. But everything is so slow. So everyone who thinks this is going to happen in months, I just don't believe it. I'm sorry. I do not believe it. And we are going up with momentum to the upside. We are short homes. Now, if you look at some of the home builders, when I look at some of these home builders, I'll just type it in HOV. Or I should say Leonard Corp's got the longest amount of information. This to me looks ultra bullish. We hit this peak here. We broke out to the upside. And what do we always do? We buy the back test. What are we doing here? We're back testing. That's what we're doing. We're back testing. This here, to me, is bullish. It's bullish as you can get. Why? Because we've broken the psychological level of this long consolidation period where we consolidated from 2005. This here is one big consolidation period, this entire period here. And if you notice, we've got the move up, hit our head, smaller pullback, hit our head. This was the 2020, and then we broke through. Now we're doing that retest move, and we are going to launch higher. We're going to go to unimaginable levels probably because of the housing shortage that we have to catch up. That's where my head is. This looks bullish. It does not look bearish to me. And when you start looking at some of these other ones, like here's Toll Brothers, and I'm just trying to find ones with good data, large amounts of data. This is another breakout of that pattern. This is a move higher, a consolidation from 05 all the way up. We broke to the upside doing a retest move. This is a retest move, guys. If you take the big picture view, you start looking at the interest rates, you look at the deficits in the housing market, you look at the inflation that's out there, you look at what they're trying to do. They're trying to, the government is scared. The Federal Reserve, I should say. The Federal Reserve, not government. The Federal Reserve is scared. They're trying to raise rates as quickly as possible. They're letting the rates go up. They're letting it go up. The market wants higher rates. And I think we're going to see a bounce here and move higher. That's what I think. But that's my take on it, guys. I think that everyone has the wrong time frame. That's what I think, and I don't think they've done enough homework. Could we have a large pullback like we're having right now? Yes, it's exactly what we're having. I have to see the data before I get in the crash recession. It's not here yet. I can't. Our indicators don't look far enough out, and the indicators that we do look, it's not coming within 6 months. That's my opinion. I don't see the housing starts decline, and it has to decline in a trending fashion. It doesn't just move down 1 month and then everything's blown up. You have to see multiple months in a row decline. Right now, people are struggling. There's no homes that are new in active inventory. Active inventory means that we can buy them. They're all gone, and there's backlogs. So those everyone who's in that camp, I just think they're wrong. That's my opinion, guys. If you like this content, give me a thumbs up. I have a couple of articles written on my website, the finding-value.com website. You can see them on there. I go over this in decent detail on the housing market and real estate, what the drivers of money and money rotation is, ratios, all of that stuff. You can see that in the silver membership. In the platinum membership, you get all my picks. You get these picks, like some of these home builders that I like, and I'll be posting those up here shortly for the home builders because they are coming to buy points here. But those are the ones that I like that you'll see on the website, and I'll be posting those here shortly. But I don't think we're in a housing bubble yet. I think that's probably 5 to 10 years out. It's my opinion. If the data changes, I'll definitely change my mind. I'm going to obviously leave that open for me to change whatever my mind is, given the data shows that. But right now, I don't see it. I'm sorry. And yes, they are going to become less affordable. And yes, it's going to be harder to purchase homes with increasing interest rate environment. I completely agree with all that. All right, guys, we'll catch you next time. This is Finding Value.